Everyone, and welcome aboard. It's nice to have you here for Trading Buddies on this Monday, the 3rd of April. Yes, it's a new month and very close to Easter. 3 or 4 days till Easter. And those of you who celebrate that, I'm sure you're revving up to get into the festivities. It's actually not a festive thing, is it, until the 3rd day? But anyway, I'll leave that with you guys. I'm looking forward to the long weekend with my wife, I've got to say. That will be nice. Okay. Good afternoon, team. I trust you're well. And welcome aboard, everyone. Let's get stuck in, shall we? Of course, Ash and George will be joining me very, very shortly to give their opinions on what they're looking for on the week ahead. Let's, however, start with gold. And gold, those of you who aren't aware, is where we like to start we like to start our week and see if we can anticipate a breakout of the Asia session for this commodity or this precious metal, if you like. And this is how we do it. At the moment, we go to the hourly chart and we isolate the range between the open of Asia, which is here, and the current candle, which is here. So the high of that range at the moment is right here, around about 1964.46, and the low of the range is right here at 1949.74. So what we attempt to do here is see if we can get the breakout of this range, which is a little bit broad today, I've got to say. There's been a bit of movement on gold, and it's come down to a very clear support level. The problem areas I see here with taking this breakout today, bang straight into the weekly pivot just after our entry, that's dangerous because you'd be expecting some sort of bounce off the weekly pivot. As long as it doesn't come down to here before it goes up here, that's fine. But if it chooses to reverse from here and take out our stop testing this low, then that becomes a little bit of an issue, obviously. For that reason, we would normally be in a defensive frame of mind trading into that weekly pivot, but we're not adding filters to this at the moment. It's simply testing the breakout and see how reliable it is, no matter how far it goes. So here are the entry and stop loss levels if you want to follow it. And if you are going to follow it, I would highly recommend that you do so at a very, 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 very small risk. Because, as I say, this is not a proven system. It is simply in test mode, and we're gathering the data on this to see if it's going to work long term. And if it does, prove to me and Ash that it works more than it doesn't. In other words, if we get a reasonably positive result on it, the equity curve has to be reasonable, otherwise it's not worth doing. So we'll keep you posted on that when we declare it fit or otherwise. So we'll start with the entry to the short side, and that will be underneath the low of the range at 1949. We'll use the round figure. We're about a minute and a half away from that happening, only a minute now. And we won't place it until the candle closes, just in case there's a last-minute surge, but that will be your entry for the short. And the stop loss will be also the entry for the long, which will be at 1965. So we'll be going 1949 and 1965. Somewhere in between those, I was born. Somewhere in between those. I'm the only person in the room that can say that. Okay, getting close now. We can pretty much set that up. And we'll go with the short first because we're closer to that. And it will be a pending order, sell, stop. Now you'll notice I'm just going to get that in at the very, very minimal amount of 0.03 of one lot. And that's good. Entry level, like I said, will be 1949. Was it 49? I think it was. Yep. So 1949 is the entry level for the short. And the stop loss is also the entry level for the long, which was 1965. There we go. Now, take profit. We are using really the first recognized, if you like, support or resistance level. Now, for me, that pretty much has to be, I'll go a little bit wider to see if there's something more obvious underneath us, but it looks very much like that level there. This one's the biggest swing, I suppose, so we can use that, which is also DS3. So 1939. So the reward for the risk is pretty poor on this. The reward will be, what did I just say? 1939? Yep. Okay. Shorts in the market, or the order is anyway. And we'll just double check that that's right. Entries here, stop losses here, just above the high. And the first take profit, well, sorry, there's no first take profit. It's all in, all out. So the take profit level is right there. So that looks good. Now we'll reverse that for the buy. It's a buy stop. And we've got that set at price 1965. .00, stop loss 1949.00, and you take profit for the long. We'll have to trade through the weekly pivot and call the daily pivot our target, which will be 1975. So the reward to risk here on either of those trades or both those trades is not real flash, but that's not what we're, again, it's not what we're trying to prove. What we're trying to prove is this can be profitable long term. And if that means that we have to take less reward for the risk that we take occasionally, so be it. Righto, I think you've got that down pat now, guys. I'll leave that one alone and we'll come back and look at the progress a little bit later on. Now, those of you who have been trading with us for a little bit of time, hang on, I'll just make sure all the socials are getting what they need to get. I'll just recap the two trades that we are in, or that I'm in, and some of you may as well. Last week, we were 2 weeks into a trade on dollar CAD that we entered up here. And thus far, we've had a pretty good trot on dollar CAD. Our first take profit was at the monthly pivot. We've actually shot through that monthly pivot now, courtesy of a gap down this morning, but we did close below that on Thursday and Friday, which gave me a little bit of confidence to suggest we're on the right track here. As far as targets are concerned, well, there's an obvious confluence area right here at around about the 133, whatever it is, can't remember now. 133, the figure really, 1.33. Now, the problem with this, of course, is we're going to have a retracement at some stage. Now, that retracement at the moment, to my mind, would be back, and I'll go to the daily chart to show you that. That retracement will minimum be DR2 area, which is pretty much this low, which has been resistant through here pretty strongly. The problem area is above that, however, and you can see that we've got a congregation of pivots here, monthly, weekly, trade line that was broken. You would expect a retest of that at some stage. I'm hopeful that that retest happens after we get down here, and we've got a fair bit of dough in the kitty. But if that does happen, the trailing stop, which is now well below our entry, will be hit, and that's okay. It's not ideal, but it's okay. We'll at least make some money on this trade. If we get down to another resistance and support area, which is here, then I'll probably look to bank some more and trail some more. But if we simply go straight back there now, then we've got a winning trade. It's just a matter of how much. We've been in that for, what, 2 weeks, 3 weeks nearly. On Wednesday of last week, I think we finally got a trigger on the Kiwi CAD. This was our only trade that was entered last week, Kiwi CAD, and we picked up the double cross on the monthly pivot. If you want to know what that is, I'll probably talk about that a little bit later, in particular if you prompt me. But it was a whole bunch of things. There was a false break of a trade line coming through here. There was a false break of the monthly pivot. There was a double cross on the monthly pivot. There was an ABC play off the monthly pivot and a trade line going through here. It's just something that lined up nicely. And, of course, we're playing the channel. And that's why we've got a target area down around here somewhere. But I think that's only a first target area, frankly. Yes, we've taken profit already and we've moved our stops to entry, but I still think there's a lot more left in this. I think there'll probably be another one, maybe even 2 points of entry for this position as it does retrace. So that's what I'll be looking for on Kiwi versus the CAD. So both of those tucked away nicely, and the only question is how much money we make on that, which is always a nice question to ask. As far as what I see for the week ahead, I do have an order placed short on Aussie versus the dollar. Well, I thought I did. Where is it? Here. Okay, this is a bit messy, I've got to say, but it's kind of a combination of things. I've got a trade line coming through here. This is the weekly chart that I'm looking at because it is the beginning of the week. And the directional bias here, for a couple of reasons, is now short from myself anyway. But I shouldn't probably say now short, because we've been in a prolonged downtrend since end of 2020? Yeah, November of 2020. So we've had a break of that trend, if you like, to a degree, if you use that as your trend line. Well, we had a false break before, and this looks like another false break of that trend. So how I'm picking this up is an intermediate trend line through here on the weekly chart, break above, back below, retest, enter short below that bar there. So that's what I'm looking for. On the weekly, I have used the high, not of this bar here, which is the retest bar of the break. As you break, there's your retest. But I've been a little bit more conservative than that, using the swing here, if you like. Well, I hope it's a swing, and we do pick up some more momentum to the downside. So that's the order that I've got. The only order I've got at the moment, and it's Aussie versus the US dollar short. Entry level, if you're interested in following it, is 0.6629er, and the stop loss is 132 pips above that, which makes it 0.67 maths 61. 0.6761. I'll just check that. Don't want to give you the wrong number, but the math should be okay. Yes, that's right. 0.6761. Now, the problem with this trade is there's a very, very short trip to the first support level, which, of course, is this low here that I guess triggered the soft rally, I'll call it, back to this support and resistance area. So I'm expecting a bounce off that, which should drive through there. But if it fails to drive through there, I want to get safe in the market when it hits that level. So for that reason, my first take profit level is at the 50 pip mark, which is 0.6579, if my maths is correct on that one. Yep. So again, poor reward to risk on the first part of the trade. The first part of the trade is really to get yourself safe in the market. The second part of the trade is where you'll make the money, which is down here, and we'll get some profit in the bank before we hit that level, if we are so fortunate to do. The tragedy of last week, if you like, apart from my own personal issues, I lost my best mate, right, which is why I couldn't be here on Thursday. And so it's a pretty sad week for me, I've got to say. But these things happen, and I'm not sure why I brought that up, but I now am. because that was number one tragedy of the week. This was number two tragedy, and I didn't get into the dollar yen trade that I pointed out to you. I think it was last Monday anyway. Might have been Monday or Thursday before, I can't recall. But this one set up nicely, and I'm still not in it. Haven't had a deep enough retracement to get in. But I think if I get that opportunity where price does pull back, maybe even to the weekly pivot this week, then I'll be jumping on that one as well. It's pretty clear to me what's going on here, and that's why we called this one last week. To me, it looks very much like a sentiment cycle. And if that's the case, we've just had the wall of worry going up here. And this very, very much looks like an aversion point to me. And if that is the case, then we won't only go to here. We'll probably go up to here somewhere at some stage. That expired thing there is the pain that I suffered before this one took off. That's not this week, however. I think there's probably a few days to go before I'll get an opportunity to do that. If, however, it happens on a 4-hour chart, maybe as, I don't know, I can't see a false break of resistance upcoming. What I probably can see is a very convoluted left shoulder over here. It'll look better on a bigger time frame. A head sitting here. And if price were to get to this level, then pull back off it, maybe hit this level again, that would give me the entry that I'm looking for. I'm hoping that's the case. But as I said to George last week, when hope enters your trading, then you're probably on the wrong track. We shall see how that pans out. That is certainly on my watch list, but there are two others on my watch list. One is Aussie Kiwi, and I nearly took this morning, actually. I'll give you a look at that. Aussie versus the Kiwi, which is set up a little bit further. Weekly chart is suggesting that we go short here. Why? Well, when I look at the weekly chart, it's setting up my week, right? And what I'm really looking to achieve here is find a directional bias. And if you look at this chart here going back to 2013, I speak about this often with Aussie Kiwi because it's so predictable in this area. It just ranges, and whenever you get to 110, you want to start thinking about selling it. When you get to parity, you want to start thinking about buying it. Now, currently, we're about 107 mark coming off 115. So we put in a big false break of that 110 area. We've retested that 110 area, and now we're sinking again. Why the weekly chart's telling me to go short? Well, we've had 2 weeks in a row where price really couldn't rally, which is really a bit of a shame for me because I like to see a rally before I short. 3 bars really after, pardon me, after this big sell-off down to this support level. Failed to get back into any sort of price level above this support area. So whilst I don't like that, I'd much prefer to see price come back a little bit further. It's also what I call a game changer bar from the week before last. Barely, I suppose, because it's closed near the low, hasn't closed on the low. That's true. But then we got an inside bar. And that's always of interest to me. So if that coincides with the big picture, if you like, the directional bias that I formed from the monthly, then that is a trade for me. Why haven't I taken it? Well, that's a bloody good question. I chose Aussie dollar over Aussie Kiwi. But if I get the opportunity to trade this short as a result of maybe a false break of resistance on a smaller time frame, this is the daily, you could throw in the 4-hour as well. So if I get up to here, monthly pivot was calling. If I get up to here, fail to take out that high or even match that high, then sneak back underneath this level and retest it from below, then I'd be more than happy to take this short, getting some profit in the bank before those lows. So I think that's the ideal scenario for me on Aussie Kiwi. There's one more, and it's Euro Swissy. I hate to trade Euro Swissy because it's a terrible beast to catch. But the weekly chart, once again, is giving me exactly what I just described on Aussie versus the Kiwi. And that is week before last, game changer bar, and then an inside bar to follow. The one good thing about this, there's more than one good thing. The really good thing about this is that we've had a close above that trade line. Why is that good? That's good for me because if the bulls are indeed going to take charge here, they should use that as support, and we're currently seeing that on the smaller time frame, the daily there. Monthly pivots there as well, protecting where my entry would be, which would be underneath this bar or even this bar, stop loss above the tweezer top, if you like. Slightly out of context, the tweezer top. But again, if I wait for this to break high, consolidate, come back below this area, retest it, we've got plenty of room to take some profit. So that's why I've held off on that one as well, and I've chosen Aussie dollar at this point to trade pretty much the weekly. But I've got my eyes focused very sharply on those two: Aussie Kiwi short, Euro Swissy, pardon me, also short because they're game changer plus bars as well. Right, I'm going to leave it there. That's my little piece, and I'm going to bring in Ash, I hope, and George very, very shortly thereafter. But firstly to Ash. Go, buddy.
Hi,
how's
mate.
your weekend?
Yeah, very good, mate. Very good. I'm really sorry to hear about your loss, mate. It's
shit, mate. Really off.
Anything like that is just not very nice to hear. But let's see if we can get some positive moves in the market this week. I mean, I have to say that I'm just going to put one more trade on, and I will just going to get to you about some of these ideas I've got today, because over the weekend we've had OPEC plus cutting production, and there we go. That should be all right.
Yes, I did see a big spike in oil.
Yeah, huge spike in oil. So OPEC plus cutting production, and that has led me to. I mean, there's a few things now to watch. The CAD obviously is front and center, and I've got some ideas about the CAD yen this week that I'd like to implement. But I'll show you where I'll be interested in that. But the trade that I've just taken.
Yeah, I can't say I'm disappointed with that.
No, I mean the stars really have aligned for the CAD this week. We've got pretty good fundamental releases kind of like being posted this week, potentially. You know, if trend continues, then there's no reason that we don't see the CAD quite a lot higher. And you know, we've had a little bit of negativity from the yen this morning. It was a bit mixed, but CPI data from Switzerland was weak, and that also kind of puts us into that potential band. The big problem now is that with OPEC plus cutting production, inflation is due to go higher, and that sort of does push us towards, you know, that's the one thing with the yen. You know, eventually the BOJ are probably going to need to play some sort of catch up. So that's the only sort of caveat. But what I've just done this morning is I've taken a long on the FTSE, and even though this looks like a pretty silly place to take along, when you kind of consider that we are overstretched in this area, the trade is actually a hedge trade, and it's long FTSE and short Nasdaq. So I'm just looking to see whether the OPEC, because much of the FTSE 100 is balanced with Shell and BP, the two big oil companies. Shell up 4% so far this morning, and BP up over 4.5%. As we speak. So we've got sort of the oil companies doing pretty well and dragging the FTSE 100 higher. If there is inflation concerns coming in, obviously the Fed are probably in a position to be looking to act again. So that would put some pressure on the tech stocks that have also had a very, very good run. So looking for some shorts in the Nasdaq, and not really a long in the FTSE per se, because I think that the FTSE is going to struggle as well. But I think if they're going to come down, then the FTSE probably will outperform on the way down, and probably if they're going to go up, the FTSE should outperform on the way up as well. So that's the current trade. It's a hedge trade. FTSE long, Nasdaq short. And now if we look at what's happened so far this morning with WTI, untradeable really at this particular level. But that gap does now perform a pretty good area of support. So that's at 75.70 area. And now the other thing about that gap, of course, is that it's also going to meet this this break of this trend line in and around. It might be a little bit higher. Yeah, look at that. I mean, it's right on the money, really. So anything down in this area is looking pretty good. I don't know if Lewis is in the room, but Lewis called this last week. He was looking at a long in oil and a short in gold. He was right on both of them. Gold eased to the downside. Inflationary concerns coming in is probably going to push those 10-year yields higher, which will probably have a little bit of pressure, more pressure on gold. But the concern really is that you get into a trade with gold to the downside, and then it all again becomes a safety kind of hedge, a hedge against the not against inflation, but really the current dynamic that we got washing around the globe. And you get caught in a position short, and then it just starts to take off. But it's certainly looking like an attractive proposition at the monthly pivot to go long. So whether we can go long to go short, that's going to be, I suppose every trader's personal it's their personal decision, but also their, just how their kind of stomach can hold that. Because I wouldn't be that keen on going short on gold, considering that the scenarios that are out there, because it's not really as binary as inflation goes higher, pushing the 10-year yield higher, and gold comes down. The issues that we are having just kind of puts gold still on the front, still on the front foot because of the global concerns. So if we look at the CAD looks pretty good, right on a level of support. On a level of resistance here on the CAD Swissy. I've put a little alarm down here, which is near just above the monthly pivot. But come and test this area here and this break of this trend line here as well. So I'd like to start analyzing the CAD Swiss as a long trade here, and I'd also like to analyze the CAD yen long really down here. I've kind of put in a buy zone. You see this on a 4-hour,
Mate, when
which is
your
all the way
alarm
down the
goes off,
monthly pivot.
can you give me a tingle? Because I've been trying to go long this thing for 3 months maybe.
Yeah, sure thing, mate. Yeah, well, I mean, I'll let you know if it starts to shape up. I like the look of it. I really like the look of it. If this comes down to my area, which looks a little bit, if we consider, the dynamic really right now, the fundamental bias is for the CAD versus the yen anyway. But the big thing is the seasonal aspect. The seasonal bias for the CAD is very, very strong, and one of the aspects of it is that the first week tends to be strong. Then it takes a bit of a dip, sort of, after the first, let's say 5 days. Then it starts to come down, and then by the time we get to around about April 14th, the CAD yen again over 25 years, 10 years, and 5 years tends to have a pretty good run. So I'm looking at the CAD yen, and I would have loved to have got in really this morning as the market has opened up, but can't trade it here because we're right on this level of resistance. And also, this isn't the only level of resistance. When you look at on the weekly, we can actually see a pretty big line coming down here as well. So we're sort of floating around that, and it might well be through that area, which means that it's probably got the squeeze to the upside. But I'm just not very comfortable trading up here. I'd really like to see this. Actually, we might need to tighten this line up a bit, but if that line's around about there, it does suggest that we might well be through, which could suggest that 98.50 is about as good as it's going to get. But I'd like to see it down to 97.70. The question now is what's going to drive it down there, because with OPEC plus cutting production, that probably should help up the Canadian economy, and probably the trade balances we'll see this week, if they're not already positive, because it wouldn't have filtered through just yet, but if they're not already positive, if they're positive, the subsequent months should really start to push it higher if there's not some sort of reverse on this decision, or the United States don't figure out how they're going to provide more supply to the market. So CAD yen looks out and out bullish. It's just, where's your stomach? Where do you fancy getting in? I don't really like it here. You could ease in here. That's the one thing you could do. You could ease in at this particular point and then just buy up right the way down to probably the top of the buy zone. I don't think you'd be able to get to the bottom of it, but to the top of the buy zone here, which is at 97.70. That wouldn't be a bad call, but I just don't know whether the risk to reward is worth it at this particular price.
Sounds like FOMO might be a bit of an issue for some this week.
Exactly, mate. Exactly, and I've got some really myself, because the thing is, the because of the seasonal bias, because it is now, that's what it's basically saying. Get into the CAD yen the first day of April and hold it for a week, and then allow it to ease back, and then get in again on the second week, because that is an aspect. It does look like an attractive prospect even now, even though we're so high. Particularly now we've had the OPEC plus thing. Now we've got a driver to kind of get us going. So yeah, I've got some questions myself, but I just don't fancy the chart, and really, in some respects, if you start to break the kind of the technical aspect of your trading, purely on fundamentals and seasonals, then it does kind of lock you up for future trades, and I don't really want to get into that. So I'm not going to get in, but I have got a kind of a bit of frustration that we're at this particular price.
Well, the good part, mate, is we're still short Kiwi CAD, still short dollar CAD, so one or two of those might play out fairly well for us.
Yeah, yeah, Kiwi's looking weak this week, as is the Aussie. Rate decisions coming. It might well change now. The OPEC plus things, just started to ease back, because just started to cut production, because I was looking at really the Aussie kind of raising interest rates, and then in the press conference potentially even announcing a possible pause. And oftentimes after a rate decision, we do see a sell-off in the currency, because the anticipation that it might be the last one.
Mate, I've got a feeling you might see a flip of what you just said. I think they might pause and then suggest that they're going 25 next month.
Oh, okay. Well, that would be good. The OPEC plus narrative now makes things difficult, and the reason it makes things difficult is that will push inflation back into the world economy, and with that coming back, do central banks now have to possibly? Well, that maybe change their narrative. I don't know, but right now we've just got to take things on face value. We've got jobs data from the United States this week. If the jobs data is strong and is backed up by OPEC plus cutting production, I would suspect to see the dollar continue strength. If the jobs data is weak, there may well be a bit of a reaction. We might start to see some dollar sell off, but bubbling in the background will be that OPEC plus meeting. So I think this market could be a bit of a tricky one this week, and it might be worth something like buying into something with long stops, with nice wide stops, just to see if how the narrative does play out and don't get too chopped up. We'll see how that FTSE situation turns out. I think later in the afternoon is probably going to be a bit clearer, because I think they both do come down. I think both indexes come down. I'm just looking really for the FTSE to outperform. So there's quite a lot to think about. I haven't placed a hedge trade for a while, but it seems like the right day to try it.
Okay, cool. Speaking of indexes, let's see what price action is telling us on the indexes, or certainly telling George on the indices. Hello, mate.
How you doing, mate? And sorry.
Top of the world down under, mate.
Oh, top of the world, but sorry about that sad news.
Yeah, cheers, mate. It was a shock. I mean, the guy was, he's mid-80s, and I guess in a nursing home, but yeah, wasn't expected. And when it's not expected, it just kind of, you go into shock, and you, what?
Yeah.
Why? What? And I haven't seen him for months, and yeah, just didn't get any opportunity to go and say goodbye, and that's the one that hurts. And everyone who's been through COVID with family deaths knows all about that. So It is what it is, mate. But thank you for your kind thoughts.
No problem. It's the experience of life. You can never get used to death, no matter what happens. So,
yeah, I'm pretty good with death, actually. I'm a bit of a realist, and when it comes, it comes. Just hope it's not me anytime soon. I guess that's the only thing we can look forward to. Thank you, Paul P. Appreciate that. Sorry, mate, interrupted you. Let's go. What's happening price action?
No problem. Can I have some powers?
Oh, yes, that would be me, of course. One day away and I forget my duties. Unbelievable.
No problem at all.
There you go, mate.
There you go. Let's share that. You see, it's interesting that there's one little comment that Ash has made, which just kind of put things together in my mind. You notice that I've never put oil on my charts. The only time I've put oil, I think it's Ash is asking for a comment on oil. Was it Jeff? And I popped it up and took it off. I just never traded it because I've always, been concerned about being exposed to the fundamentals around it. And I've always found it quite rangy. So I've just left it out. But when you made the mention that the FTSE UK 100, as I traded, I mean, the two big companies, or the big component of it is what's happening in the oil markets, right, with the big oil companies. So I said, oh, interesting enough. So I am actually, to some extent, trading that commodity. So I'm exposed to it. So I'm then very comfortable never to put it up because I don't want to double my exposure. If that makes sense.
Certainly does.
So just having a look at the daily, and probably to tie in with what you gents are saying, I'm not in any trades in particular at the moment, and I'll tell you why. Hang Seng 50, I think this index has the potential to go lower. I mean, if you look at all of the structure, blue channel, failed breakout, potentially failed breakout above it. That level there, low of 7th March is where the bears kicked in for that second leg. And I think the bears are going to defend that. And that Friday candle kind of, to me, indicated that. So I think the higher probabilities favor a lot more selling. Now, I just took off a channel here, which I don't want to clutter my charts, but this will help me explain why I think there's a little bit more selling to come. If you look at this channel that we have here, tight bear channel, bear is very strong. At the bottom of it, when we got to this level, big round number 20,000 and all other things in the mid of 2022 range, we had a failed breakout. So when I see a failed breakout of a channel, whichever comes first, whether it's at the top or the bottom, I start to think of a reversal pattern at the next failed breakout. So there's a first failed breakout in the channel. Then when we had this, that was a second failed breakout. So that for me sets up a higher probability selling. Now, when I see this failed breakout of this channel that we had here, there's a trend line in red, failed breakout above it, possible setting up of a new channel now. I think the bears are setting up to sell. Now, if we do get the selling, when we get all the way down here, if we get there and we get a failed breakout of this channel, that becomes the second failed breakout of this big channel, then the bulls have a potential just to come up accelerating off the lows there. So it's probably a longer term view, but in the short term, I'm looking for the market to sell off and just accelerate down. Now, it's already had a failed breakout from the morning. I wasn't trading that. And I'm not likely to jump in now because I'm keen to sell. And I'll keep a look to see what happens at the break of the low of Friday when the reversal pattern sets up. If I don't get in today, I'm not bothered because I will look at it tomorrow. If tomorrow we have a bear candle, this pattern is going to repeat itself. And by the end of the day, we have a decent enough bear candle, high test, small body. Then I'm still going to look to sell to see if we get acceleration below this big round number here, 20,000. Problem, of course, this week, I mean, this market is closed on Wednesday because there's a holiday there in China. Then there's Thursday trading, then there's Easter. So, you really got to be careful at least I'm careful jumping to the market when the week is structured the way it is in terms of trading days. Either way, I don't want to end up worst case with a loss that I have to try and start to claw back. Next week is a 4-day month and all sorts of things, a 4-day week. So unless it sets up pretty pristinely, I will not do anything there. UK 100, that level for me is a key level. That was the high of 2022. I thought when we were into Friday, we had that key lower high. So I was watching that and thinking that the bears who created this lower high would come in on Friday and give us a bear candle. Had they done that, then I would have been eager to jump in and look for shorts today. But that bull candle is problematic, because as far as the bulls are concerned, yes, bull candle here, bad signal, but they had followed through, which is good. And they've gotten to that lower high. As small as it is good for the bulls. All they need today is to have a bull candle. Then, there's strength here. Then it kind of changes my thinking that happens. Any pullback, I start to think that we might get a higher low double bottom and a bit of acceleration up. So today is absolutely critical for UK 100. I'm bearish, and because I'm bearish, I want to start looking at the market, looking for shorts. So if we fail to get above what was the high of 2022, there is still the beginning of this huge bear breakout, which is a lower high. So I'm not rushing to do anything with the market. If today, however, ends as a bull candle closing above the high of 2022, then there's sufficient strength for me to look at the market tomorrow and say maybe on the 5 minutes there might be bull follow through, which I can look for longs to jump in and just go with it until we get to a possible reversal. So I'm going to wait and see how the day ends today.
It's a really interesting day, actually, Joy. I'm looking at the kind of dynamics within the FTSE right now. And as I said early on, both Shell and BP are up over 4%. The banks are up as well today. The banks are up. HSBC's up. Barclays is up. Lloyds is up. And then you sort of get the consumers. So the staples, Unilever's down, only just, but it is down. Tesco is down. So the likes of Rio Tinto, so the growth kind of aspects of the market, all down. And it's suggesting the concern is that the pressure that OPEC Plus has put on the market is driving up those oil stocks just because of a lack of supply. The fact that the banking stocks are going up suggests that banking kind of concern that we had last week, for the huge fluctuations in the market, that looks like that might have lifted. But the fact that you've got things like Rio Tinto, Diageo, Unilever and Tesco all down, that suggests the consumer is not willing at this stage anyway, will not be willing to see that higher inflation narrative. So the way that the kind of the mood seems to be sort of going with the FTSE 100 is the OPEC thing is going to be the driver. And it's really sort of from here, just because you were mentioning oil, it's really, whether we believe that the likes of Shell and BP, their gains will outstrip the companies that display the concern. And at this stage, they're winning the battle.
See, yeah, yesterday, I was in the Trader Talk session, and I pointed out to the guys that, going into April, the big problem for the bears, the bears came off that all-time high. They controlled the candle for the month. But the big problem is all this buying. And all of this buying up, creating the tail, there has to be momentum. And that momentum is going to carry through into April. The bears want to come and defend all of this, but there is enough momentum from price action to suggest a little bit more buying, in the early parts of the month. And then the bears have a chance to reassert themselves. They still control that candle. So, they still have the opportunity to, crush this market, if you want to put it that way. So, if I'm forced if I had to do anything at the present moment, if someone says, okay, there's a chart, you have to do something, George, what are you going to do? I would just sell here and I'll put my stop up here. That's what I'll do. But expecting that there's got to be some more buying. I mean, this is too strong to create that kind of candle. Some more buying. Because the bulls are saying, well, higher low double bottom. Okay, here. We had followed through, that's failed, but we can still create some form of a channel and keep going up. But from a bear perspective, they're saying all of this. I mean, if you go to our line chart, the highest close we've had, in years has been here. But all of this, all the tails we see, the bears have been coming out and just defending that position. So as far as the bears are concerned, I mean, if you're a strong bear, like you're saying, you have a very wide stop, you just keep your stop up here and wait to see and expect the trading range to carry on. And at some point, that momentum will wane, and then the probability will start to shift back to the bears. But when I go down now to the daily time frame, I just look at it and say, well, again, if I had to do anything, I just look at this huge sell-off. And I'll say, well, if I'm going to do something, we're in the middle of this big sell-off, but I'm going to sell, I'll put my stop up here. The reverse of it is, of course, true for a bull. A bull will say, well, I'm a strong bull. I can afford a wide stop. I'm just going to buy, but I got to put my stop down here because it's not clear yet. We need to just work it out, see whether we get a lower high double top, or if the bulls create a higher low double bottom, that's going to be forming in here. So if you're forced to do something on this time frame, that's what I'll do. When I go down to the 5 minute, the daily is going to at least give me probabilities, higher probabilities in a certain direction. Then, I'll work on the 5 minute as it unfolds. But I want to go in with a big, sense of, okay, the probabilities are favoring. So I'm looking to short. I mean, yesterday the guys were had me saying, if you're going if you're going to trade today, look for longs. So I might sound like I'm contradicting myself, but I was saying look for longs because of the follow through. But I'm bearish. So although the longs may be there, I'm not taking them because I'm pretty slow to change my mind. I've learned from experience. If I go and buy, if it sets up, it takes me a while to get out, and I'm not so quick to reverse back in. So I'd rather just wait and then execute it, be quick to get out if it goes against me, than to scalp in and out waiting for it to set up, if that makes sense.
Yeah, it does make a lot of sense.
Gold, I pointed out, so let's just start. I was talking to guys, some of this should not be here. I think this should be on the daily. So my view when I was chatting to the guys yesterday was that gold is bullish long term. The bulls have to do a little bit of work. But what I pointed out is if you just look at March on the structure of it, although we had a tail coming off that 2000 level, the body is closed above the February high. So that's pretty strong. And it was not an outside candle. Had it been an outside candle after we trade to failed breakout, then we are in a trading range. You start to worry about what's going to happen in the highs or the lows. But this is a decent enough candle for the bulls, because the bulls will be thinking, hang on, from all the way down here, high, low, double bottom, etc. Good breakout, reversed a few candles here, follow through. This is just a 1 bar pullback as far as they're concerned. And they're thinking leg 1, pull back leg 2, we have to get to this level. That's where the bulls who have been doing this will be satisfied. And this candle gives them momentum. It's a pretty good candle. So I'm expecting a lot more buying by the bulls to break above 2000, close above it, take out this April, this all-time high from way back here with double top, and try and get to that level. And if they do get there, then of course, we start to get very interesting things taking place, possibilities. start to take place, because then they'll think, well, low, high, we are strong enough to get to our first measured move. Even if we get a pullback, let's go for a measured move of breaking above here, and then we're going to get all the way here. I mean, I think that's possible in terms of the bullish probabilities. So when I go down to the daily with that in mind, I'm bullish, but I got to see how to get into the market. So when I point out to the guys that, listen, this pullback here is a converging triangle, and it is near impossible for the market just to end up as a flat line. That's not going to happen. But a converging triangle, if you look at it enough times, a certain forces, higher probability is going to work in a certain way. There is a higher probability of a breakout in the direction of the last signal. Okay, so we get a bear breakout. Whether it happens today, tomorrow, the market has a higher probability, 80%. So most of the time, put it that will come back to test the apex. So if you look at enough of these convergent triangles, that's how it operates more often than not. Breakout, pull back, come back and test the apex. At the apex, if the bears are strong, they'll give us a 2-bar reversal or a high test, and then we know, oops, okay, we're going to sell off. Or the bulls will just give us a higher low double bottom, and then they're going to go there, and their goal becomes the measured move of the ape or of the height of the triangle, which is up there again. That's the goal. That's where they want to go. So I'm long as far as gold is concerned. So I didn't go in today because there has to be a bit more selling because of the structure of it. But I'm looking to go long. If today comes back and becomes a low test candle, then definitely tomorrow I'm going to be in there. If it ends up as a bear candle, not a problem. I expect that a convergent triangle, there will be a bit of selling. We'll come back to test the apex, which creates a high low double bottom and a possible opportunity for both parties. Whoever creates a reversal signal here or acceleration is going to go up. So I'm waiting to go long on gold. Then euro yen, really looking just to go short below this candle. Didn't get in early on, so that's fine, but I'm going to wait to see how the day ends. But I expect trading range behavior, that there will be a bit of selling, where they'll come down here and then the buying comes back and we just carry on with that side of this price action. So that's kind of my outlook, and it's more of an outlook now because I don't think I'm jumping into trades today, but I'm very keen to see how the day ends and influence my thinking into tomorrow.
Makes sense.
Brilliant.
Makes sense.
Mate, why have you isolated euro yen, mate? It's interesting that you just picked that one out of the blue, or have you picked it out of the blue?
I'd love to have a scientific response, but it's probably more out of the blue than anything else. And I'll tell you why. I mean, in that review I was doing just end of the quarter, one of the things I say to myself, I'm not sure if I mentioned to you guys or it was with the Wednesdays at the market, that I'm very comfortable to put all my energy into a 12-hour day. So I'm active in the market at 3:15 my time AM when Hang Seng opens, because I'm up about 45 minutes earlier doing some other stuff. And I'm going to stay in there, take breaks, use my dumbbells, have coffee, walk around. But I'm going to be active in the market for full 12 hours. And that kind of takes me through to 3:15 p.m. my time, which, because of daylight savings, is 50 minutes before S&P 500 operates. So I dropped S&P 500 because if I take any trades there, before I could stay all the way up into 8 p.m. in the evening to manage the trade. So I don't want to do that. So I wanted a bit of diversification in my portfolio, happy with gold as a commodity. And now I can say happy with gold built in, with oil built into UK 100. So I'm going to sound even smarter than I was before. And so I wanted a currency. I wanted to bring in a currency. I've traded all the currencies for a while. but I wanted to eliminate direct exposure to the US dollar because everything is against USD, right? Each of the indexes. So I thought maybe if I work across, at least an element of that, of just direct exposure to the USD is removed, despite all the economies being versus USD in any case. So which currency, which cross can I go for because of that? And I thought, well, Euro Yen is the most liquid. And it really, that's as far as the science goes. So I didn't want to trade directly Euro versus the dollar or USD versus the Yen just across. So I just picked that up and I said, whatever it throws at me, I'm going to trade it and enjoy it.
Brilliant. That's scientific. How is that not scientific?
I can make anything scientific, mate.
Oh, you can. You're a genius at it. Absolutely. And you won me. Actually, there's three currency pairs I used to trade when I started. Euro dollar on the 30-minute chart, which was just what I did for 5 years non-stop. But I also used to trade Euro yen and pound yen, but not on the 30-minute chart, on the 4-hour chart. Now you're going to trade that on the 5-minute chart, right?
Yes, 5 minutes.
Right.
Yes, yeah.
Okay. I want to listen on that one time.
And
when we meet in Bali, straight after the Trading Buddies trio sings their song, right?
we'll definitely do that. Yeah. I'm beginning to build the track record on that. I don't think I haven't hit, maybe it could be, but it's not yet 100 trades on Euro Yen. It was quite a bit and it was quite profitable this last month. But when I hit 100 trades, then I think I become more of an authority on myself. So then I can talk more authoritatively about it. It's the same strategies, so there's nothing new. I'm just waiting for the very same things that I wait for on indexes and gold and just apply it. So nothing changes there.
Right. So you're going to be how do you put it? You're right. 60%, 100% of the time. Is that right?
Yeah.
As long as that maintains, everything's cool. Brilliant.
That's it. That doesn't change, yeah.
All right, mate. Thank you so much. Really appreciate it.
No
there won't be a show next Monday, right?
No,
because
no show next week.
No, there's no show. Yeah, because of
Easter.
No show.
Because of Easter. Yeah.
So I'm sure you'll be is celebrating the right word for Easter for a Christian, mate? Or is it more?
Celebrating the holiday, for sure. I mean, give me any holiday, I'm going to celebrate it. So,
brilliant. All right. Well, enjoy that festive occasion, and we'll catch up on fortnight today.
The week after, yes, for sure.
Well, I think that's not a holiday, but I could be wrong. There's a few holidays coming up.
Right, yeah, there's lots in May, actually. Lots and lots in May. But I think we've got... that might be the last
Labor
one in
Day
June.
as well, isn't it? 1st of May, that's...
1st of May, last Monday of May, and also we've got a coronation to kind of take care of as well. So that's another little thing.
Well, that bloke who predicted that Charlie won't be coronated, he must be getting a bit nervous, eh?
Nostradamus.
No, there was a bloke only a couple of months ago. He said, no, that one, he made some, it's not Nostradamus, might be his great grandchild or something, I don't know.
Yeah.
He predicted that Charles will not be coronated. There will be no coronation.
Well,
maybe he's an assassin, I don't know.
He could be, mate, but as far as I'm aware, Nostradamus has beaten him to that. He did actually say the same thing from what I gather.
So he actually stole it from Nostradamus.
I believe so.
I wonder if the Nostradamus family are thinking of suing him if it happens. We'll see. All right, where are we? Not that long to go. I think I've delivered my. No, I haven't. I've got a few to go. Shall I do that?
Yeah, do it, mate.
Go ahead, mate.
Righto, happy days. I don't think I missed too much, but I mentioned the Aussie dollar. I didn't mention CAD Swifts. Ooh. And CAD Swiss, as you know, because I just told you, and you've been in the show for weeks and weeks and weeks, of course, was something I've been trying to go along on for the longest time. At the moment, the Oracle is telling me, the Oracle being the weekly chart, is telling me that we're completely confused, and the previous week's selling bar at that strong support level, or becomes resistance, is the crucial area. I mean, I guess we knew that beforehand, but we got an inside bar on that as well, suggesting that if price were to go south again, it's going to go through here and make a new low. I don't know that I'm on board with that because of the discussions that we've had, of course, surrounding oil in particular. I'm just considering whether this would be a good trade to take as a ABC. But the bars are telling me not yet. So I have to be cautious on that one. You said you've got a trade ready on that one?
Who, me?
Yeah.
Not yet, mate. No, I'm interested in it. I'm watching it, but I've got an
Right.
alert, which means it's got to come down quite a bit before I'm interested. Kiwi Swiss, I'm much more interested in as a long. Just looking at the commodities, this is the thing. If you consider what we've got these potential commodity currencies, and the Swissies just struggling, so far this morning. So Swiss yen is the one that I'll probably plump for at this stage, but what I'd like is the CAD Swiss.
Okay. Well, I think I'll join you, and I don't think I need to wait for retracement now because we've got is that a morning star for you? It's not a good one, I know, but
no, because that third bar doesn't go anywhere near enough into the first bar.
Had it closed here, would have been okay, right?
It would have just about made it, maybe, but 2/3 I really want, closing 2/3 into the first bar.
Yeah. Okay. So that higher low doesn't really count on the back of that because you've got to have a reason for that to be the confirmation. But so far, it's proved okay. I don't think I need to wait for a retracement on this. I think what I do need is a clear break and retest of that level there. And if that were the case, I'd be looking to pick it up here somewhere, I think, to go along. But the weekly game changes, they're telling me just hang on to your britches there. This may not go long just yet. So that's interesting. Euro versus the dollar. I don't know that I mentioned that before, or did I? I don't think I did. And the reason I want to mention that is because it's getting back to another sell potential here, if it's not there already. Weekly chart. Well, actually, I'll start at the monthly and make the case. The case is that this long-term support trend line, it is a trend line, or was a trend line, going back to 2016, is very, very clearly been rejected for the second time, maybe the third time. And here's the point. On a monthly chart, right? And I want a sign here that this is going to fail again, or it's going to be a winner. It is, in fact, a game changer bar on the monthly, now that the monthly's closed, to the upside. If I go to the weekly chart, this once again becomes the crucial area. You can pull a trade line or a trend line, whatever you want to call it, from the highs up here. It's a long bow to draw, I've got to say. But here's your crucial area. We've now got a confluence at, 109-ish. So I've got to be watching this area very, very closely. And if I get a sign that this is going to be rejected, then I'm short. If I get a sign that's going to break, then I'm probably going to be long, but the long will take a lot longer to develop for me. So on the short side, weekly chart, have I got a reason to think that we're going short straight away? In other words, have I got a rejection bar? Not really. I had one the week before, and we've got an inside bar on that. It's tough to be saying, okay, I've got a directional bias based on those two bars, the spinning top and one that's come off its high, but it's also come off its low. I think I need to wait to see price on the daily maybe give me a false break of resistance before I would consider going short. To do that, and price does look a little bit toppy-ish. I'm not convinced, but game changer bar, put the market down. Game changer bar, failed to put the market down. That's interesting for mine. And then I draw a line across here, and I've got a classic slingshot candle pattern suggesting that we go long above these highs. Ouch. Terrible place to go long, in my humble opinion. That said, I'd be happy if I got a bounce off one of these pivots. Weekly looks like it may be happening as we speak, but the monthly would be better still. And if that were the case, I've then got a sequence of higher high, not really, it's equal low, higher high, higher low, equal high, higher low in here would be interesting, given that I've got a candle pattern here that suggests that, and this is one of my faves, that we go long here. So drilling down again, I go to the 4-hour chart and I'm looking for a long off support. Now that's no longer valid. That trade line hasn't set up for short, so it has to go. So let's bring it down here. So I've got two opportunities at the moment to pick up a long. First one, if this breaks, hits the monthly pivot, drives it back above that trade line and retests it, there's my opportunity to go long. I can put some money in the bank before the highs, which is a far better prospect of trading that on the daily chart. Second opportunity would be exactly the same thing off the bottom trade line, where we break it, consolidate, back above it, close above the monthly, retest that area, and again, look for a long. For the short side, I've got to wait, as I said before, for that false break of resistance, which will come if this slingshot candle pattern fails. In other words, if we fail to take out the high, then we come back below, retest, then I'm short. But I think we're at a really, really good trading area for euro versus the dollar, and it goes back to that monthly chart because this is a very, very, very strong area right here. So if I can find an entry, I think we're either going to test the lows or we're going to test the highs. Either way, if you can get in at a reasonably good price at a reasonably minimal risk, you're going to have a lot of pips available to you at some stage. So that's why I like euro dollar. Not sure of which direction just yet, however. So I think the others that I've given you, as well as that, should keep you busy, or should keep me busy enough for the week anyway on the bigger time frames, and maybe even the 4 hours. Gold hasn't triggered yet. The long, and don't forget those of you who haven't traded this before, this breakout, it is at very, 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 very low risk in terms of your stake. And you need to cancel the short if the long triggers. You need to cancel the long if the short triggers. Okay, so I will leave you with that thought process. And I've got it, adding my 2 cents worth to gold. I think we're in an excellent part of maybe fundamentals to trade this as a range at the moment. I'm not sure what happens next in terms of what's going to drive gold, to be fair. So for that reason, I think the market's probably going to be a little bit on the want to go long but not sure, don't want to go short at support, don't want to go long at resistance. So I'll be looking to range trade this for a little bit, I think, until we get another news or fundamental announcement, maybe war, I don't know, that drives gold. I could be wrong, but
no, I think that's a really interesting idea. I mean, it's a really interesting idea, and also, and the only question, when anybody steps into the market, we have to be considering a few things, but one of the things we should be considering is the environment volatile, or is the environment, as you just pointed out, potentially range bound? The way the charts have opened today, it looks a bit rangy. It has to be said, and I would concur with you on that. I think a lower level for gold looks likely, but actually, that lower level does stick within the range. So I'm with you 100%.
Yep, I think that's the way I'll be looking to trade it this week. If we get the opportunity, it may not even give us. Sometimes gold ranges, and it ranges for quite some time, but it ranges, I'll put it as inappropriately. So it doesn't bounce and then give you an opportunity to get in. It just bounces and goes. So great for scalpers, not great for people who like to have confirmation, such as myself. But we'll see. That'll be my attitude until something breaks, I suppose. We'll see. Mate, that's about us, eh? Have you got anything to add?
No, nothing to add, mate. I think we've, I've laid out my case for the markets as we stand. It is going to be about jobs data Friday, and as much as anything else, that's really what we're looking at. Even though the big concern now is the jolts. Is the OPEC scenario. Does that play into Russia's hands as well? Probably does. And therefore, does that actually make the case even stronger for the likes of gold? But I think in the near term, the real play is going to be, what will the Fed do if the inflation continues to spike because of a lack of supply in oil? Well, their decision will be a lot easier if the jobs market remains strong. So I think if we get a strong number, I didn't think it would move the pin that much if we got a strong jobs number, because I thought priced in pretty much. But now I think that plays an even bigger factor into what happens to the dollar this week. So strong jobs number as we come into Wednesday, Thursday, I think we could see that dollar move, take another leg higher. A weak number, it could have the adverse effect, but I'm not sure how long it's going to last, considering what else we've got going on.
Okay, and keep your eyes on the Aussie tomorrow as well. Interest rate decision.
Yes, yes, absolutely.
I'm of the thought process, and I've got nothing to base this on apart from my own opinion, which is not coming from an economic expert point of view. I can assure you of that. I've got a funny feeling they're going to pause and indicate that they'll look at data as they always do, and maybe another 0.25 next week. But as you say, that oil situation may have tipped them in the okay, we're going to go again.
Yeah.
Corner.
Yeah.
We'll see.
Commodity currencies look pretty good.
Yep. All right. Let's do it. Let's get out of here. Don't forget, no show next Monday, guys, because of Easter. But we'll wrap up what's happened this week on Thursday, and that could be interesting going into a holiday. What we're going to do in terms of the trades that we're in, we'll see. Mate, thanks as always for being my trading buddy. George, we'll see. You've got a show on Wednesday.
Yes, sir. We've got live trading profits at 6:30 p.m. Singapore. It's only 15 minutes, so it's nice and punchy. That's all we got this week. The Wednesdays of the market start next week, so it's an easy week.
But you can place 9 trades in 15 minutes on those charts you trade.
I probably can put 9 or maybe even 10. You know what I mean? Just spend how quick
have a good week ahead, mate. And thanks for joining us as always. Thanks for being our trading buddy. And thank you guys in the room for being our trading buddies. Have a great week ahead, and we'll catch you on Thursday. See ya. Bye-bye for now.